What if I told you that the most historic breakout in Japanese equities this year is actually a massive bull trap being set right now, while the herd is pouring in with size they can't afford to lose? There is one danger zone and one hidden opportunity right now. I'll show you both. The Nikkei 225 just crossed 67,000 for the first time ever, and every single time frame screams strong buy. But the real story is not the breakout. It's what happens at 67,368. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow, and one invalidation number that will separate the winners from the trapped. This is your instant market verdict on the Nikkei 225. Session bias is a melt-up continuation that I am treating as a fading opportunity at resistance. The trend is overwhelmingly bullish: monthly strong buy, weekly strong buy, daily strong buy, 4-hour strong buy, 1-hour strong buy. But when every time frame aligns in one direction with RSI already above 72, that is not a signal to chase, that is a signal to map the liquidation level. The single invalidation that flips the entire structure is a daily close below 66,270. Write this number down. If we break 66,270 today, the entire bullish sequence resets. Now here is the micro insight. The herd is positioned heavily long above 67,000, piling into AI names and the breakout. Narrative. Open interest has swollen on Nikkei futures, and retail sentiment surveys show extreme bullishness. When everyone is already long and the move extends into a psychological round number, the market has a habit of engineering a violent stop run. That's why 67,368 is the trapdoor. Let's go deep into the technicals. And I want you to visualize this chart from the weekly canvas all the way down to the 60-minute noise. On the weekly time frame, the Nikkei has been carving a relentless series of higher highs since the double bottom at the 200-week moving average zone months ago. That 200-day moving average, sitting way down at 53,395, is the structural floor that the entire bull market is built on. Price is nearly 14,000 points above it, which tells you the velocity of this trend is exceptional. When you zoom into the daily chart, you see the 20-day moving average at 63,362 acting as the dynamic trend accelerator, and the 50-day moving average, which I calculate around 60,080, is rising so fast it's almost vertical. Price is above every major moving average by a wide margin, and the MACD on the daily is positive at 1947, with no bearish divergence. That means momentum is still expanding, but here is what most traders miss. On the 4-hour, the RSI has pushed above 72, and, although there is no immediate divergence, the angle of ascent is so steep that any pause invites a sharp mean reversion. The key resistance above us is crystal clear. 67,368 is the structural pivot from the weekly volume profile, and above that, 68,404 is the next liquidity magnet. On the support side, the immediate daily floor sits at 66,270, with a secondary congestion zone at 66,232. Those are your stop-run targets if the trap triggers. So the technical narrative is a highly overextended but still valid trend that will either consume resistance and squeeze to 68,400, or fail at 67,368 and flush late longs straight into that 66,270 support. Every tick now is a volatility compression waiting to release. Here's what most traders miss. Look at the cross-asset linkage. The Nikkei is moving tick for tick with the AI theme, with SoftBank becoming Japan's most valuable firm and carrying the index like Nvidia carries the Nasdaq. But Japanese equities are also swimming in a unique liquidity tide because the Bank of Japan shows zero urgency to remove accommodation. Real yields remain deeply negative in Japan, forcing domestic institutions into stocks. That's why the Nikkei can rally even when US futures hesitate. However, the wildcard is the yen. Any sudden yen strengthening on a risk-off shock would instantly pressure exporter-heavy Nikkei names, and that would be the fundamental catalyst that validates the trap. So the bottom line, the AI story is fully priced in, the positioning is crowded, and the technicals are stretched. This creates a 2-week directional lean that I frame as an initial shakeout below 67,000 before the next leg towards 68,400. The event that invalidates this view is a 4-hour close above 67,400 on aggressive volume, which would signal that institutions are absorbing all selling and the melt-up extends. Do you think the Nikkei breaks 68,000 this week? Comment yes or no right now. I'm tracking consensus, and I'll reference this in tomorrow's breakdown. Now we move into the trade setups, and most people click away exactly here. That's precisely where the money is made, so keep watching. I'm giving you 3 distinct strategies with exact levels, and every single one comes with an on-screen trade plan you can screenshot. Strategy 1. The sniper. Conservative. This is the pullback buyer's plan. We wait for a false breakout above 67,368 that gets aggressively rejected. The trigger condition is a 1-hour bearish engulfing candle closing back below 67,200. And then a second 1-hour closeback inside the range near 66,500. Showing momentum has flipped intraday. Entry comes on a limit order at 66,300, aiming to catch the dip into the daily support zone. Stop loss sits at 66,100, which is below the 66,232 swing low and gives a cushion against a wick. Take profit 1 is 67,000 even, and take profit 2 is 67,360. That gives you a risk-to-reward ratio of roughly 1 to 3.1. The setup is void if we get a daily close below 66,000 even, because that would break the higher-low structure and turn the trend neutral, the sniper. So the entry. 66,300, limit, after 1-hour rejection at 67,368 and pullback signal, stop loss. 66,100 take profit 1. 67,000 take profit 2, 67,360 risk, reward, 1:3.1 are invalidation, void if daily close below 66,000 strategy 2, the active trader, standard. This one plays the confirmed momentum extension. We are not buying the breakout blindly, we are buying the successful retest. Wait for a 4-hour candle to close above 67,400. Confirming that 67,368 has flipped to support. Entry is on a pullback to that very level, 67,370, with a 5-minute bullish engulfing confirmation. Stop loss is placed at 67,000 even, below the breakout point and the psychological handle. Take profit 1 is 68,200, just before the round number resistance, and take profit 2 is 68,404. Once TP1 is hit, move the stop to break-even and trail it by 100 points. This setup leverages institutional flow following through after absorbing the trap. Type your Nikkei range for tomorrow in the comments now. Give me a high and a low. Let's see who's aligned with the volatility forecast. The active trader, Fengad entry, 67,370, after 4 hours close above 67,400 then pullback, 5M bullish engulf, stop loss, 67,000 take profit 1, 68,200 take profit 2, 68,404 risk, air reward, 1:2.8 are invalidation, void if 1H closes back below 67,250 strategy 3, the aggressor, high risk. This is the counter-trend trap play, and it is only for those who can lose small and manage risk aggressively. The idea is to fade the initial spike into 67,368 before any confirmation of a breakout, anticipating that the herd's late longs get liquidated. Entry is a limit sell at 67,300, with a stop loss just above the resistance at 67,450. Take profit 1 is 66,500, and take profit 2 is 66,300, aiming for the support zone. This is a low probability, high reward snipe that depends entirely on a failed breakout pattern within the next session. If the market instead rips through and closes above 67,400, you exit instantly. Again, this is the aggressor plan, and size must be tiny. The aggressor, high risk entry, 67,300, limit sell, expecting false breakout, stop loss, 67,450 take profit 1, 66,500 take profit 2, 66,300 risk, reward, 1:2.7 are invalidation, void if any 1H close above 67,500 400 never risk more than 1 to 2% per trade. No positions through high-impact news like BOJ statements or US ISM. Stops are non-negotiable. This is how you survive to trade the next big move, so here's the summary. The single most critical level for the next session is 67,368. If price accepts above it on volume, the melt-up continues. If it rejects, the trapdoor opens towards 66,270. Tomorrow's focus is the US ISM manufacturing print. A sharp number could shift yen and Nikkei futures violently, so we'll cover that reaction live in tomorrow's video. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.